Hi everyone, welcome back to the TradeInformer Podcast. We're back in the strange plant room, and today I'm joined by James Glyde, who is the founder of PipFarm. I think a lot of you will be familiar with him. So James, you just arrived from Cyprus. Thanks for joining me. And today we're going to talk about fraud, I think.
Oh my God, my favorite subject.
Yeah.
Hi everyone, I'm James and I founded this prop firm called PipFarm. And I've been keeping David informed of all of the interesting developments that we've been going through over the past year. And our top secret undercover operation, which took a lot of guts to pull off. And I think we pulled it off.
Yeah.
Didn't get the head on a stick that I wanted, like I was telling you about. But I think now we have this open myth that there is like there are a lot of bad actors in this industry that are trying to exploit the business model, and poor prop firm owners like me are suffering really, really hard.
Okay, well, maybe we can take a step back and just look at sort of why, like, first of all, why this happens, right? Because I think if you look at the broker space, this is something that impacts them as well.
In a different way, yeah. But of course it does impact them.
But so maybe you can just explain that, right? Because from my point of view, if you were executing trades in a certain way as a broker, it would be quite similar to what's going on as a prop. There's
like one extra vulnerability that we have as a prop is that we don't have collateral from the trader, right? So a broker has like way more tools to be able to manage risk because they can just transfer it. They can just STP whatever they think is toxic and send it to an LP, right?
Yeah.
But for us, that trader maybe has like $1,000 of margin. So they have $1,000 of margin.
Yeah.
But with us, if we have for example, a 100K account, that has a maximum loss of like 10K. So you could say there's like 10K of margin there. But what we had from the trader, their commitment is like $500.
Yeah.
So it's like we're trying to make 500 into like 10,000. And that is normally fine because normal traders trade in a certain way. But then when you have these arbitragers, they're trading when you look at it. Like if a risk manager or a dealer in a retail broker looks at it, they'll just be like, oh, that's fine. Nothing to see here. It's not aggressive. It's not sharp. It's not HFT. It's nothing like that. It's just someone wakes up or doesn't even wake up. Just at the end of the day when the Asia session opens, they just go long 5 lots of gold. Yeah. The thing is or what we realized was quite likely, they're also short somewhere else.
Yeah.
So the game is to just buy all these challenges, get funded as many places as they can, and then they have this leverage, but not with the same margin requirements or the same cost to be able to get that leverage. So that's like the vulnerability that they're exploiting.
Right. Okay. So again, maybe we should kind of take another step back, start from the beginning. How did you realize this was happening, right? Is it just a case of you were looking at the sort of P&L and going, it's not possible that there's so many people are passing. There's one facet of it. And then I suppose the next thing is if you can just talk through what exactly was going on. So, how did you realize that you were being targeted and kind of roughly what were these people doing?
Yeah, so this happened very early, so we didn't reach any kind of maturity. And I believe because of my background and reputation, the market believed that we were much bigger than we were.
Yeah.
Now it became a self-fulfilling prophecy, but at that time in September, that was when we only just started to get traction.
Yeah.
So I believe somehow I attracted what you would traditionally consider the least profitable types of trader for this business model, like the cheaters, obviously very unprofitable, and then also the most experienced traders because they had a craving. There was a gap in the market for someone who would not mess around with them, and they saw that in me and they all came to us. So it's what a really experienced trader wants and what a scammer wants is the same thing. They want someone who's not going to mess with them.
Yeah. Out of interest, was the fact, because I remember when you started, it was, you emphasized the fact that you were the cTrader only prop or something like that. Do you think that actually attracted both the good and the bad because they kind of know, I just don't know, right? Does an experienced trader have some awareness of the fact that if you're using cTrader, you're kind of unable to that the provider is unable to kind of mess with their trades, fill that for to use a euphemism.
I'm not sure if that's like well established all over the place.
Yeah.
I know that it's like a key message that cTrader has always had, to be this traders first. You can't mess with stuff. Like that's always been their key messaging. But I'm not sure if it's like really penetrated the market.
Yeah.
Especially in like the new prop world, because they're not the same traders. Like these are new traders who have only interacted with prop firms. So these things are not something I'm sure they're aware of.
You started in September, you're attracting these experienced people, the scammers, and then you started being targeted more or something like that.
Yeah, and how did we like figure it out, right? So because of like at the time the book of clients was pretty small, so it was easy to see anomalies because there wasn't so much noise yet.
Yeah.
And at that point, we could see, especially on the 100K accounts, which was the preferred, like it's the most economical account because some genius at some point decided that risk should get discounted, like it's a cash and carry or something. So like as you get to like the bigger accounts, like they get cheaper and cheaper, like per dollar.
Yeah.
So they are like the most economical accounts for them to use, and they're also like we offer like 200 and 300K accounts, but a lot of firms don't. So it's kind of standardized as well.
Yeah.
So they go for those. And on that specific account type, on the 2-stage 100K account, it got close to 50% pass rate. And if like,
yeah,
I didn't even need to think very hard about like why that is. Like, oh, half of them win and half of them lose. It must be, it's a hedge, right?
Yeah. And so is all they're doing what you described? It's just they go into one, because I think, again, if you look at the most common thing that impacts brokers, it's someone opens an account at broker A, they open an account at broker B. A lot of the time, we'll take advantage of things like deposit bonuses, and then you just go, okay, big news event, open to opposing trades,
and then like get covered by the negative balance protection.
Yeah,
it's a bit like that actually. Yeah, but with like a lot more steps involved and also a lot easier to obfuscate. Like it's very easy because you're already funded, you're already able to like start the scam. You just go to 2 live accounts, put your $1,000 in, get your super high leverage and super fun bonus. And then you do it. And it's like very obvious when you do it. But with this, like you go through like rounds and rounds of challenges. Then you go through, they have like tons of like little tricks to obfuscate it. And it all gets like blended with all the other traders.
Yeah. So my immediate question would be, is it not just obvious because of how the mark out on the trade? So if someone is doing what you described, right, they will probably very quickly move into profit. And if you look at the likelihood of that happening, obviously is because of the spread, the kind of is worse than 50-50 odds, right? So if someone is just consistently opening in trades and then immediately either bombing or moving into profit, would it not just be immediately, okay, that person is...
But that's kind of what I meant about it. Like, it's not sharp, it's random.
Yeah.
So actually, they could have the trade open for the whole day and it doesn't reach either target, up or down.
Yeah.
And then they just close and they try again tomorrow.
Interesting. Okay.
So, and they never roll the positions because of swaps. So, and that's why the trading frequency is very low because of the spreads, because of the commissions.
Yeah.
So it's like 1 trade per day, and then they avoid the swaps because obviously that's gonna, deviate from the 50-50 chance. And they also they avoid news. So, like in contrast to what they do in the CFD brokers to take advantage of the negative balance protection, they actually avoid news.
Why? So sorry, why is that?
So some prop firms, they have like a prohibition on news trading. So they actually their prospectus or their like like modus operandi. Operandi, is it?
Yeah, modus operandi. Yeah, Latin lessons here as well.
Yeah. So they kind of comply with all the rules. So even if we don't have a rule, they kind of follow what's, set in the industry.
Got it. Yeah.
To avoid issues.
And so how did you figure out that this was, let's say, something more, a group of people more targeted as opposed to, just some guy and his friend? because obviously, I could, well, just me as an individual, right? I could, in theory, do something like what you're describing, but what you from speaking to you, right? And there was article on Finance Magnates, I think you did about this as well, right? Where this was like a group of people. If it felt almost like an online mafia or something like this. So how did you figure out? Okay, that is who's targeting us, as opposed to, David in his flat in North London is just opening 2 trades simultaneously.
Yeah. So it wasn't actually from the trading data. Like a lot of companies, they kind of think like, if we just analyze the data really carefully, we'll find the anomalies and we'll find the patterns. But it's so random. Like retail traders do random stuff.
Yeah.
And also these guys, what they're doing is also random because they're just doing red and black. So you can't like find the strategy in random. You have to find it in other connections. So IP addresses, everyone may trade from different IP addresses, but when they verify their identity, all from the same IP address,
Yeah.
Or if everyone uses the same iPhone to do the ID verification, but all the trading is done on different VPSs, right?
Yeah.
So, or they use the same crypto wallet, or they use the same credit card. That's the thing, is you're kind of chasing them.
Yeah.
So, in the beginning when we first understood all of this and we did a full audit and just went through everyone.
Yeah.
Some guys had already taken 25 grand before I realized that they were paying on the same credit card. Well, actually they didn't. They tried to pay on the same credit card, but didn't do the 2F, the multi-factor.
Yeah.
Probably realizing, oh no, that's the other guy's card. Let me put the right one in. But we weren't checking things like failed transactions. So then you have to bring everything in, everything you can possibly know. You have to then bring it in, look at it, and it's really hard to automate this stuff.
Yeah. No, it's funny you say about the IP address, because I probably 18 months ago, I got a message, and this happens semi-regularly, I think probably not just for me, but for most of the guys who run news websites, where you have someone who says, I lost money, this broker screwed me over, blah, blah, blah. So in this case, this person was an IB, so I said, okay, send me the trade details, the contracts, all this kind of stuff, and I can see if what you're saying is true. So you sent over 2 things or 3 things, and it listed the IP address, and I was like, why do you all have the same IP address? It's obviously, and you're trading in opposite directions. It's like, how dumb do you think I am? So that I've noticed that elsewhere, I suppose. But you mentioned the 25K, right? How extreme, if you can say, did this get?
Yeah. So I believe last year for sure at least 50% of our payouts went to cheaters. And it probably is more like 70 to 80.
Seriously?
Yeah. So last year we paid out $1 million. So that's at least half, but could be a bit higher.
Wow.
Just because there's other people I suspect but haven't
So okay, so actually, right, you're talking about how difficult it is to find these people.
Mm-hmm.
I think my impression was that part of the way that you figured this out was that these people were messaging or advertising a kind of scam service, right?
So this is how we took it even further to really understand. And it was more of a marketing stunt. It started out as one, but then I got way deep and it became very real, and then it became a mission,
Yeah.
And then I kind of got a bit lost, I would say.
Yeah.
So we get like you mentioned, we get people messaging us all the time, I got info, let me share it with you. And then they start telling you stuff and don't know if I really trust you.
Yeah.
But then we had one, and I was and what he did is, I usually am not receptive to this stuff because it's a bit of a gray area, but he sent a list with 20 emails. And he's look, check this. These people are in this group.
Yeah.
And I checked it, and 3 were our customers already. And several others were on our mailing list. I'm no way. So okay, let's talk.
Yeah.
And then
this was just a random person who
yeah,
was kind of like a
but
whistleblower or something.
so the good thing about Discord
Yeah.
is like you have like it's very hard to like make accounts there because they connect it to a mobile phone and you can't just use, because I've tried, you can't just use like
a burner phone or something.
Like, you know, there's these services online where you can be like, hey, just give me a UK number, like when they just rotate them,
like a burner phone kind of thing. Yeah.
And those don't work. They don't get the like SMSs properly. So you need like a real phone number from a real network operator. And so it's like quite hard to just spin up new Discord accounts. So we are we have an account that is in every prop related Discord group. So if someone is like suspicious to us, we go and we check every prop from Discord server to see if they're there and see what they've been saying.
Wow.
To see if they've like had trouble anywhere else, to see if they've been promoting bad ideas and stuff. So I forgot where I was going with this. You said undercover operation, right?
Yeah.
So we kind of like checked this guy out, and we concluded that he has been around and he knows stuff and he's collected information. So we decided to like continue talking with him. And then we got an intro to the group, one of the most prolific group that has like 1,000 members.
Yeah.
And this one is very scary because it's not like a bunch of people from one country. They are geographically distributed. They're like in Canada, the UK, they're in Australia. Yeah. They're everywhere. So because I knew that, I'm like, okay, I want to be in this one.
Yeah.
So we tried to get in. We failed their KYC.
Why? What happened?
Ironically, we're using a VPN. So they have a registration form, and they can tell that we were using a VPN to pretend we're in Sri Lanka.
Yeah.
So then they start like doing like enhanced due diligence, and we couldn't pass it because we didn't want to give the real identity. So we were doing probably the worst job of like turn all the lights off in the room to do the selfie, you know, like sneeze while you're taking a photo of the passport, like trying to do everything to like look like we tried, but yeah. And then they're like, no.
Yeah.
And then, so we tried again, no VPN. And then they didn't even care about anything. They didn't ask for passport that time. And then we were there like trying to win because they made a promise that if you fail, we will keep buying the challenges for you. So that's their hook. So you pay a deposit, you pay monthly fee, and you're trading, and every time you fail, they buy the new challenges for you. So we're able to collect the like details of the wallets that they use to buy the other challenges that they replace when you fail.
Right. So as in you could see, but so do you have the ability to go, I want to do it with PipFarm?
Yeah. We made sure to do it with PipFarm. It would be a little bit dodgy to go do it with other firms.
No, I mean like you might just give them money and then they just go off and do it, right?
So you buy the first account.
Okay.
Yeah, and then you're kind of like set up on that prop firm, and then they keep buying the replacement accounts every time you fell. And the reason why we insisted on doing it on PipFarm is because then we can see everything and we have like full control.
Okay.
So then we spent like 2 months just like letting it happen, which was like the hardest 2 months ever when you like know.
Yeah.
Like, and but the reason why we also needed to do this because it's the only way to know for sure who the scammer is if it's you.
Yeah.
Because I didn't have like the framework yet of like how to identify them like with a very, very high degree of accuracy. So it'd be like just following some instincts, and then I couldn't be very confident with those decisions. But now we did all of this, I can be like incredibly confident and accurate that like when we do trying to find like a nice word, but terminate a trader, like we get it right.
Yeah. Okay, so there's 2 questions there. So one, were you able to actually figure out the identity of these people, the real identity? No. And the second question is but even accounting for what you've just said, right? It still seems like you can know how they do it, but it would still be so hard to see, okay, this person actually is a scammer. So
yeah.
Or if you kind of, by going through the process, you somehow figured out.
This is the thing, we'll never know about everyone who's doing it.
Yeah.
And the ones that we miss are probably going to be less profitable because they have to do more trades to like look more authentic.
Yeah.
That's the thing. And we actually did one trader interview to someone we suspected, and we like call them like, hey, can you log into cTrader? Can you show the platform? Can you show us a trade? Can you explain your last trade? So we do all those kind of questions.
Yeah.
And everything was perfect. Like explained everything, showed everything was great. Then the next day, or it was like Friday, so after on Monday or Tuesday or something, our undercover guy gets a message.
Yeah.
Trade more random. Do more random stuff.
Right.
Yeah. So then they get less profitable because they want like really like perfectly hedged trades, right?
Yeah.
So it's just a bit of spread, a bit of commission. It's not a big deal. But when you start adding the random stuff, it starts to get way less economical.
Yeah. And so do you feel that this is like at an end, or is it just is the battle ongoing? You obviously put out this, for anyone watching or listening, you obviously put out this dramatic X thread and kind of explaining what you've done and exposing these people, and that got quite a lot of traction. But does it just kind of continue? Is the battle ongoing? So the battle is ongoing.
Yeah, it will never end. And
Yeah.
so what was like very interesting after I did this is about 20 other firms contacted me, not like employees, but owners, like CEOs. And what it showed to me is like, this isn't just happening with us, it's happening to everybody.
Yeah.
Like the pain is everywhere. Because obviously if you're doing arbitrage, you need to do it in a lot of places.
Yeah.
So I think that for us, it happened at a time where it was like way more painful than other companies. So probably for other larger firms, I'm talking like top 3, top 5.
Yeah.
For them, it's just like eroding their margins.
Yeah.
But for us, it was like a nuke.
Yeah.
Because it came like very, very aggressively.
Yeah. So how long did you ever feel like it could impact your ability to actually survive as a company, kind of thing, or?
No, because I was sat there and watching it, and like it was like a strategic thing.
Yeah.
And I had a limit, like it was like we will do this until January.
Yeah.
And that's why I don't have my head on a stick, because I respected the stop loss. Because I could still be doing this, and if I didn't like have my boundaries with this like exercise, then yeah, we could like be going and going and going.
Yeah. So the other question I had was, I've heard people like Justin from FPFX talking about this, and there's some other stuff actually happening in the broker space. But is there any kind of movement or collaboration between firms to say, okay, I don't know what logistically what information you could share, but something
No, it's
like
very hard.
Yeah, so like something like a IP address, and you go, okay, guys, this person has signed up to us. They did this. Is there anything like that you think is viable?
Like, it's something that would be beneficial.
Yeah.
And like, I would want it. I think why would you not want information? The problem is like how to actually do it in a collaborative way, a bunch of competitors working on a common project. And at the same time, dealing with like, not even just like GDPR or whatever, UK GDPR, but like everywhere has a different like framework.
Yeah.
It will just become a compliance project rather than a business project. That's the issue.
Yeah, I mean, something I always wondered is if, and this is again, just some random guy thinking off the top of his head, so this may logistically just not be possible at all, but is if you could somehow take some identifying pieces of information, scramble it so it's literally just like a random 20-digit number that has no connection to anything, and that goes into some kind of
repository.
Exactly.
Yeah.
And then you just go, okay, this IP matches with XYZ at another firm.
I'm sure there's a way, because there are systems like this in many industries.
Yeah.
So there will be a way. The problem is, again, like finding the way. And it's very, we're all like super busy and have like businesses that are already like in a war. Yeah. So to have this like nice little side project is a bit of a tough one. But I would say like it's necessary.
Yeah.
But is again a case like who will participate, who will fund it,
yeah,
and who will do the work. So
I'm not doing it. You know, maybe, I don't know, FPFX. FPFX seems like it would probably be in a good position to do that, but maybe I'm way off. Okay, but the other thing that we didn't really discuss yet was the fact that these guys were also threatening you, right? As in so a part of what they claimed they were able to do is if they were successful in basically defrauding you, that they would then be able, that if you then refuse to pay out, they could have some kind of social media campaign basically saying you're crappy company, that you're XYZ, that you don't pay out.
They can do a lot of damage, and I've seen them do a lot of damage to other companies.
Yeah.
Which is why, again, they can get you, they've got snipers, they've got tanks, they can get you in many different ways, right?
Yeah.
So they don't just take your money. When you realize and hey, actually no, I actually want to keep my money.
Yeah.
They're like, oh no, you keep that money, but we'll just make sure you don't get any other new money.
Yeah.
By going on Trustpilot, by going insane on Twitter.
Yeah.
So they can do they can make it so it's cheaper just to pay them 20 grand than to let them ruin your reputation that you spent years making. So that's the other side of the coin, which is.
And did you actually see them do this to other people?
Yeah.
And it has a real impact, you think?
Yeah.
Okay.
Really, really big and really bad.
And so, how do you? So I mean, have they tried to do anything since you came out? No, they haven't.
No, not a peep.
But are you surprised that has not happened, given that they could?
I think they didn't expect something like this to happen, so they just stay away.
And so, do you think these people are you said you hadn't figured out exactly who they are, but do you reckon that these are people who previously understood how the broker industry would work and figured out, oh wait, this is a much better system for us to kind of play?
Okay.
Or are these people that, because like you said, right, you mentioned the fact that a lot of people who trade with props are kind of newcomers to this industry. They might actually not have an account or even really be familiar with just a regular broker. Yeah.
So we're going to go into rumors rather than facts.
Yeah.
But there are rumors that some of these groups are weaponized.
Okay.
So let's say are you opening a prop firm?
I haven't thought about it, but Kimbo funded, yeah. Kimbo Slice funded, yeah. So, something like that, yeah.
Yeah. So let's say you start to do a bit good and I don't like it.
Yeah.
I can call my mates and be like, Kimbo funded.
Okay,
I want you to go after him.
Yeah.
And then you start seeing all these sales and you're like, ooh, nice.
Yeah.
And then the next month you're like, oh no, all these payouts.
Right. So do you have any kind of?
No,
that's just a.
That's a rumor. Yeah, that's like the Loch Ness monster of the industry.
Interesting. Okay.
But they are very organized, and there are many of them. We've found groups in Italy.
Yeah.
Because you would, history has taught us to be skeptical of certain countries. But
I noticed so way before. When I first started looking at this industry, which was probably, not that long after I started writing the newsletter and stuff, so 2-3 years ago, and I noticed that one of the big things was people would say ban. The main one seemed to be they would ban India, they would ban Pakistan, and they would ban Vietnam. Mm-hmm. And a lot of the time you'd be kind of like, that's weird, why? And I think that was the reason, but I don't know that for sure.
Yeah. So, yeah, but here, ban Canada.
Yeah, you have to ban the entire world.
Yeah,
right?
ban. I was going to ban the UK.
Really?
Because unlike other countries, like in Vietnam, you can't do a chargeback. They don't make it. It's not just you can just tap 2 buttons in Revolut and then you start a dispute.
Yeah.
The good thing about those countries is they can't also get the money they lost back as well. Yep. In Canada, Australia, UK, most of Europe, they get it both ways. They get back the money they lost, and they also keep the money that they won.
Yeah.
And that was actually the thing that tipped me off first.
Yeah.
Like that there was some organization involved, because with like the first group we had was in Canada, and we found them the like relationships between these people in social media, and like some of them were doing chargebacks through PayPal, some of them were getting payouts, and then we saw how they're all connected. And then like actually like a lot of traders worry that we're looking at the trades like, oh, if I trade like a really popular thing like gold and someone else does, and at the same time we're like doing the opposite thing, are you going to think that I'm like cheating with them? And it's like, actually the trading data is the last thing we look at, not the first thing.
Yeah.
And there's like all these things that like make us pay attention to people.
Yeah. And so I guess one question that I think of there, right, is I know, again, if I think of the broker space, there's a tension between making your payout really smooth, because that's actually a huge marketing tool, right? Versus if someone's scamming you, they want to try and get the money out as quickly as possible. If you make the payment very smooth, then that makes it much easier. So, I remember like 6 months after I started this, so that was in 2022, having this conversation with someone at quite a big company actually, who basically was saying this was a constant problem they had to deal with, because one of the main things or products they had that people liked was instant withdrawals. But as soon as they added them, you had people who would do just arbitrage, open two positions. They would take advantage of the you can't lose more than you put in, negative balance, and then they would just immediately, if it worked, they would just immediately close the positions, take the money out.
No time to check. It's gone.
And it can happen in 1 minute, less than 1 minute.
So this is again something that we had to use, and I think it did, because we used it for too long. It did some harm to the like brand value, let's say, because in the beginning, we were paying fast, like within minutes, and we got like a lot of traction because of that. Because like you said, that's exactly what people want. Yeah. They spent their money, they traded for days, weeks, months, and as soon as they're ready, they want it. Like who doesn't? So then there was like all of this, like we weren't saying it, but like other traders were like commenting how fast we are with everything, with the onboarding, the ID verification, and the payouts. But then when we understood what was happening, we like slowed it all down.
Yeah.
And we did this because like the people who are like worried, they're not like, by that point, like they shouldn't be worried that we're not going to pay them. Then we realized, because we already paid out like hundreds of thousands, like we were like, it was clear that we were like not a scam, right?
Yeah.
So the only reason for them to be like anxious at that point is because they have something to hide, right?
Yeah.
So that's when they start like getting nervous, like, hey, it's been 17 hours, like
26 minutes and 11 seconds,
And then we're like, but it's Sunday. We don't like, but I saw that like 4.5 weeks ago you paid someone on a Sunday. Why aren't you going to pay me on a Sunday? Like, And then they get like really, really anxious, like, okay, I'm going to pay attention to you.
Yeah.
And it like 90% of the time, like they have something to hide.
Yeah. Oh, interesting. So I mean, maybe to change tack a bit, I think, we've talked a lot about scams and stuff. Part of the reason I kind of enjoy as a media outlet covering this industry is because it feels like very unfettered capitalism, because it's not regulated. It's very Wild West.
Survival of the fittest.
Yeah, and so and it really feels like that. And so if you look at the last 18 months, right, is just the amount of hits you've had to take. It's like, if you're offering meta quotes, you got kneecapped repeatedly. If you have to deal with the scammers, you have to deal with, from what I have heard, increasingly difficult to do stuff with, say, banking and payments. That's becoming a problem, like it is for everyone. And a consequence of that is obviously you've seen a lot of people drop out. I can't remember what the failure rate is, but it's pretty high. Yeah. I don't think it's actually more abnormal than in other industries, but it's still, that's very high anyway.
Higher than it should be for finance company.
Yeah. So do you feel like that process has kind of removed a lot of people?
Yeah, survival of the fittest. Yeah.
And do you see that is going to keep? Do you see that kind of like? Do you feel as though a lot of the bad shocks are out of the way, and then it's going to get, it feels smoother and calmer than it did, say, 12 months ago?
Yeah, I think so. I think it has calmed down a lot. The churn has slowed.
Yeah.
And I think like a lot of companies that could sold, like the ones that were actually like trying to do good.
Yeah.
They sold to like other larger companies or whatever. Then the ones that basically already had nothing just like, closed.
Yeah.
And then everyone else that's here is just like working the best way they can, navigating a complicated industry because it's not boom times anymore. And that's why the launch of new firms has slowed down quite a lot, because we're not in the exciting era of like just money falling from the sky.
Yeah.
You have to work hard for it now. You have to build a lot of trust with traders, and we also have to repair the trust of the industry.
Yeah.
So when you have this like systemic issue of firms just closing and just disappearing or whatever, like a lot of traders, like we do trader interviews.
Yeah.
As content, and also I use it as an opportunity to learn more about why they choose our company and what they would like to see, right? And a lot of them say, I don't trade so much with prop firms. I'm going back to IC markets. I'm going back to whoever else, right?
Yeah.
They're losing the trust.
Yeah.
And I think it's like our job as the people who survived to start winning that trust back.
Yeah, that's an interesting point. I mean, so would you say it's becoming tougher? Like if you think of the sort of gold rush, right?
Mm-hmm.
Was that because there was a big, if you look at, say, the broker space, obviously you had this massive surge in interest during COVID in just trading. That sort of has, I would say, died down a bit, but it's still pretty remarkable how much online trading is sort of in the popular culture.
Mm-hmm.
Or do you think it's died down just because there's so many firms now and the competition has kind of put more pressure onto, if you're all competing for the same pool of clients and there's 5 firms one year and 50 firms the next year, obviously that causes the pricing might change, the competition for ad spend becomes higher, all those sorts of things.
There's actually a lot of good points in there, but I would say the main thing is that this was a new market, so everything was created really fast.
Yeah.
The reason is because there was a lot of trading influencers who were promoting firms.
Yeah.
So you have these like huge accounts with like hundreds of thousands of followers on whatever platform, and they were the ones who were pushing the not just adoption, but like introduction, like it was invented recently. I mean, at its scale, right? So because of the issues, a lot of these influencers are kind of taking a step back, and they're like, I don't want to have to like apologize to like 1 million people every 3 months,
Yeah.
So they stop promoting firms, and then they stop promoting the industry.
Yeah.
So that, I think, is the biggest like consequence of all of this, and why it does feel like it's contracting, because there's like less trust, there's less promotion, and more competition. So there's too much supply as well, which is what pushed all the prices down, which then made it much easier to arbitrage.
Yeah.
So easy rules, low prices, arbitrage.
Yeah. And do you think there's a sort of point at which it can't go any further, if that makes sense?
We went below that.
Yeah, so maybe did, right? But just in terms of, this is probably a sector I don't spend as much time on as looking at sort of brokerage. And if I go on something like Prop Firm Match, right? You just skim read it, you have a look at the costs of individual challenges.
Mm-hmm.
And at the lower end, I look at it, I'm just like, it's so low that I don't understand how actually you can make money from it.
But you mean like the small accounts?
Yeah, I mean, there's some, off the top of my head, right, you can open one of these for like $50 or less sometimes.
Yeah.
And I just think, well, if you then think of, like, put it another way, if you think of this as an e-commerce transaction, and it's let's say 1 or 2 times, let's say someone is buying it twice and it's $50, so it's $100. If I compare it to the broker sector, right, where the CAC can be $1,000, and so you're only making 10% of that, because that's the revenue is the fee. I just every time I look at it, I'm kind of like, is that viable? Is that sustainable? I don't know.
Yeah. So because but it depends on the channel, right? So you're talking about a channel like I guess affiliate website
Yeah.
where they have a listing. The cost there is based on the revenue. So if it's like you're gonna pay them 10%, you pay them $5. So it's based on the cost per sale.
Yeah.
So like the prop firm industry doesn't have this like like CPA model yet.
Yeah.
Because of those like issues, like the boundary issues. So you can't.
Yeah.
Yeah.
But I see. I mean, again, this is anecdotal, right? I will go on. I'll use them as an example just because it's happened in the last week. I went on the Think Capital, which is the Think Markets prop, and I go on there just to check something, and then for the next few days I'm hit constantly
With the retargeting.
by Google Ads, and again, like Google Ads can be super expensive. If I search certain terms, right, you can see people are bidding on the top keywords. Again, that's not cheap to do. If you go on, I don't know, if you go on Facebook, it seems like you get spammed a lot by these companies as well. So yeah, I just look at that and I go, okay, that kind of advertising is not usually cheap.
So probably they're targeting you more aggressively because you're in your flat in North London where you probably have more than $50.
Yeah, that's also possible.
Yeah. We wouldn't like target someone that aggressively with a different profile.
Yeah.
Or their geo would actually just be cheaper to run ads.
Yeah.
Because of the competition, right? People will pay more for a guy in London than a guy not in London.
Yeah. And I mean, I suppose my follow-on question to that is something. If you look at the broker space, firstly, they're quite restricted in what they can do because of different reasons. But it seems like all of the social media platforms just hate them and want to kind of stop them from doing anything. But also, as I sort of alluded to, the pricing model, the revenue model from this business is quite different because if you're a broker, right, you can model roughly how much revenue you will make from a given person, but it's still just a model. If I take a payment from someone, I know that's the revenue, right? So as in the deposit, if I think of, okay, on average, over 1,000 people, I'm going to make 70% of the deposit that they put into their trading account versus this, where it's like, I know if they buy a challenge, I'm going to make $100 or whatever it is. Does that sort of change how you think about stuff? Or
yeah, so going back to like your point about like the cheaper challenges.
Yeah.
So if you remember my point earlier about how the risk gets discounted on the bigger accounts, actually proportionately the smaller accounts are more profitable. So if you think about like a $50 account for 5K goes into 100K 20 times. 20 times 50 is 1,000. So it's actually double the price.
Yeah.
Also, with the smaller accounts, the pass rate is lower on them, either because they are not attractive to very, very skilled traders, because a skilled trader comes to win.
Yeah.
A scammer comes to win. So the type of trader a smaller account is appealing to is someone who's just playing, someone who's testing, and sometimes they buy many, many, many because it's actually they're just practicing. It's just something a little bit bigger than a demo account. So let's say, for example, you aspire to be a normal retail trader.
Yeah.
Instead of depositing $5,000 every time, very expensive way to learn, they just go for the small challenges and they're just practicing there. And they actually treat it as training rather than let's make $20,000 before the weekend.
Yeah. And you've mentioned the fact that you try and speak with people who pass and people who are using your service. Do you get the sense that these are people who would not have used a broker previously or kind of...
Most haven't. This is what I meant earlier. It's like a new market.
Yeah. And the other thing, and I don't know what you think about this, is that I kind of see it in some ways as similar to crypto. And the reason I say that is I think if you look at crypto, one of the things I've always noticed about it is it's a very almost like bottom-up investment product or universe in the sense that I think if you look at, say, stocks or currency trading or whatever, commodities,
there's
bonds,
an asset with a value.
Well, firstly, yeah, that's not value. This is a whole other
Okay.
conversation. But what I mean is more that the infrastructure and market for those products was built at a kind of, for lack of a better term, institutional level, right? If you look back, say, 60, 70 years, the people buying stocks were basically like wealth managers, financial institutions. The same for the kind of bond market. Obviously, that's still to a large extent true, right? The amount of, say, the currency market that is taken up proportionally by, a big corporate just changing dollars for pounds because it needs to pay a dividend is much larger than, regular person punting on like an IG spread bet account. Whereas with crypto, it's almost like there's the total opposite, right? There's no interest in this product at all. But retail people are kind of fanatical about it. And one consequence of that I've sort of noticed is that they get really into
the project,
sort of product
and the team and the vision.
And the sort of machinery that underpins it, right? So, like, to give an example, I think there's another big. I'm saying another as though I'm big, but there's a big prop podcast, I think, called Titans of Tomorrow, something like that. And Justin went on that from FPFX. And I was quite surprised in some ways that he did that, because I think if you were to look at, say, the equivalent thing in the broker space, would, MetaQuotes go on a podcast that's geared towards retail trader? I think that probably wouldn't happen. And I think the reason for that is that there seems to be this kind of real, I don't know, it's almost like obsession or just being really into the product that exists among props. So there's kind of a vague, it's not really a question, more like an observation. But do you think that's accurate?
Yeah, I would say so. And there are other similarities too. You know how with ICOs they used to do airdrops, or they still do. I say used to because I don't pay attention, but they do airdrops. It's very similar to the type of marketing prop firms do with giveaways. So you go and you're like, if everybody retweets and everybody likes and everyone shares and comments, then we're going to give you, like 10 of you are going to get a free account. And then those things get like really well distributed, like very quickly. And I think I gave you the data on this as well to write an article with, about like the CPM of doing these giveaway challenges. So that's also like very similar to what ICOs were doing when they were, when they were very prolific. And again, the point about like the brand, the team, the vision, what they're all working on, because a lot of them are like connected to a community. And like our biggest like touch point is Discord, where we have like 5,000 traders, like all interacting, sharing their experience with PipFarm, sharing their payouts, their funding certificates. And the other thing is there's the certificates that go viral. So when we do a payout to someone, whether it's a big one or a small one, they're all congratulating each other because it's about success. It's about it's about everyone working and sharing their success.
Okay, I think we're almost out of time, so hopefully we can do one more question. Otherwise, cool. Okay, producer gives us a nod to go ahead. So my question on that would be, like, why do you think that happened, basically? Because do you think that's just a marketing phenomenon? Do you think there's something in the product that makes people like that? Do you think I think part of it, again, this is just my guess rather than some kind of hard fact, is that it's almost like a generational thing. A lot of the people who seem into it are sort of 20s.
And they don't have reservations about sharing stuff because, like, older people are prudish. Like, would your parents share that they made money?
Probably not.
But would they share it on social media so 20,000 people get to see it? Even less likely, right? But younger people are, like, sharing is normal. Like, they do it every day. So sharing their financial success is perfectly normal as well. And, like, but they've tried to do this. Like, Robinhood, they had these, like, P&L cards. And, like, cTrader added them, and a bunch of prop firms added, like, trade P&L cards. So you can be like, hey, I made this much on this trade today. That didn't take off. But
Really? Yeah, that's interesting.
Yeah, but the payout certificates, like when we pay someone something big, like 100,000 impressions.
Super interesting. Yeah, I mean, from my point of view, I see it as I look at a lot of the media and marketing around it, and to go back to the previous point about it being people being really into it. It's almost like the sort of new consumption of media feels like there's this real craving for something sort of real and genuine and transparent. And it's almost like props did a really good job at catering to that from a marketing and media point of view versus brokers who I think just haven't, that's not to say they're not good in other ways, but they've just, I think props have done a really good job at that. And, a lot of the time people will say, there's sort of regulatory things that would prevent us from doing that. But I look at a lot of the stuff props are doing, I'm like, nothing would stop you from doing that. You could do that if you wanted
just
to.
the only thing they do that brokers can't do is discounts.
Yeah.
But one big difference, which ICOs and crypto projects had, is there was always a founder.
Yeah.
And the founder had a strong personal brand that drove everything. And it was more about the founder than it was about the crypto thing.
Yeah.
So there's two things that are in common. You can make a ton of money maybe.
Yeah.
And you like the person who's in charge and leading the project.
Yeah, interesting. Well, okay, we've got to wrap up, but that's probably a whole other conversation for next time. So James, thanks very much for doing this.
Thanks,
I'm
David.
sure we'll chat again in the future.
Yeah.